Hello guys, and welcome to my YouTube channel once again. In this video I want to show you my continuation strategy, and I want you to watch this video to the end. If you've not watched my videos, or you did not enroll in the mentorship where I revealed how to use the continuation trading strategy to catch spikes and also scalp the market for long hours, then this is an opportunity for you to learn it right here, guys. So I'll plead that you watch the video to the end. Do not skip the video, because there are some little details I will be including here in this video, including the how to set your way to put your stop loss and your take profit, your entry, because that's one of the most important things in trading. Your entry, entries like decision making. You make a decision to buy or sell. So I'm going to reveal that in this video, and I want to watch it from the beginning to the end, guys. All right, so the first thing you need to understand how this strategy works is this. We are looking at a kind of a situation. You can see the structures we have here on the chart already. The market was selling massively, impulsively to the downside, and then it started buying to the upside, giving us this pattern right here. This is a kind of a channel pattern. Maybe I should take off this drawing, but I don't want to do that. I don't want to waste time. Just follow what I've already done. You see, I've placed two lines here to create this channel that we have, the ascending channel, and we know that once we find an ascending channel, we wait for a breakout, and once there is a breakout, the market mostly sells to the downside. Once there's a breakout, the market mostly sells to the downside. Now, if you look at this time frame, we are on the 4-hourly time frame, and for that reason, you know how much it will, how long it will take for this to happen. After the breakout, when to enter, because like now you can see there was a breakout here. The market, first of all, after the successful breakout, the market closed bearish, and the next candlestick was bullish. Let me see if I can zoom in a bit. Let me see if I can zoom in a bit. All right, the next candlestick was closed bullish. So at this point, um the market you if you enter the market immediately on the close of this bearish candlestick that broke out, then the market would be buying to the upside. Okay, the market sold before then buying to the upside, so you might be in some losses because you can't define your entry, except you have a very large account and you decide to put your stop loss right above here. Then you are very safe. But if you don't have a large account, then it is wise you wait for some confirmation before you go into trade. Then also, what I want you to take note of, you don't just find the pattern. What you need to see that must have been moving the market must have been moving, creating higher highs and higher lows. The market must have been creating higher highs and higher lows, especially that is the market. If you want to trade sales, meaning the market must have been buying, like what happened here, creating higher highs and higher lows. It's very risky if you would just go to say, okay, the market was buying, maybe, and the buying was just a smooth buys, like um, just bullish candlesticks throughout. Then you try to join a line, form a pattern. You won't get it right. It's very risky, guys. So you want to see a situation where the market had already, where the market was giving you, was creating highs and lows. Then you can successfully join a trend line or join trend lines to determine what kind of pattern the market has created. Once you do that, then you wait for the breakout. Now, while these patterns while this pattern is forming, you will come across some key levels or resistance zones in the market, like this one that is marked here. You can see there's a strong zone here in the market which I marked, and you have to take and be very careful with it. Unless this zone here is broken, especially in this particular time frame, only when this zone is broken that you can really confirm the market is going to buy to the is going to continue selling, because market has been buying from this zone. It sold from here and bought from here. You see, try to buy again from here and bought again from here. So here the market breaking out of this trend line and getting to this trend, this zone here, this key support zone or key level, there's no guarantee that it's still going to sell, except there is a breakout, or there's a kind of confirmation on a lower time frame before you say, okay, then I can enter the market to sell safely. Now, let's say the market has successfully broken out with this bearish candlestick down here. How do you know when to enter the trade? How would you enter? If you want to wait for the market to complete, to wait to see a kind of a break below this zone here, it might take a very long time. But all you need to do is to go to a lower time frame, because entering a trade on a higher time frame um, increases your stop loss. Your stop loss will be large, meaning what you will possibly lose will be large. So to reduce that, you go to a lower time frame so you can get a perfect entry for this trade. Now take note of the fact that what I'm trying to show you here, before I go down to a lower time frame, you have to measure the distance it took the market to get to the, like from here. You can see what I'm doing now. See where the market started selling. From here, you mark from this point it started selling to where the channel started actually. Then you take this same distance and measure from where the market is breaking out, and that's where we expect the market to sell down to. That's where we expect the market to sell down to. That it mostly works. And what is most likely always happening is the market will most likely get to this particular support here. The market will always most likely get to this support. Is 99% of the times the market will get to this particular spot here. Once there is a breakout, the market will get. Then the other one, the other idea of measuring this length depends if on the actual direction of the market. If the market is actually selling, then it created this pullback, then we see this as a pullback. If the market was actually selling, you will see this as a pullback. Then there's every chance that the market will want to get to that distance after you've measured something like this. After measuring here, then you take to measure right here too. Then you can easily place maybe a box like here to where you will see your target. So there's a very big chance the market will get to this box here, to this zone here, and you can take your second TP or even go beyond that particular spot, guys. It happens several times. It happens almost all the times, guys. So in that case, I won't want to. Let me go down to show you where you would have entered the trade. Let me go down to the 1 hourly time frame. To the 1 hourly time frame. Let me trace it. Oh, sorry, guys. Um, 1 hourly time frame. Okay. All right. So on the 1 hourly time frame, if you would want to see a bearish engulfing candlestick pattern, if you are waiting for a bearish engulfing candlestick pattern, then this is where you would want to enter the market. You want to enter on the close of this particular bearish candlestick here. Then you put your stop loss above here, compared to entering it on the 4 hourly time frame, which we saw, which your stop loss would have been up here. You see the stop loss is now reduced, but yet I won't still want to enter on this time frame. I will still go down to a 15 minutes time frame to see if I can get something else. Let's go down to the 15 minutes time frame. That's not it. Okay, great. So now on the 15 minutes time frame, this is it. Now you can see that the market also formed another structure after that breakout. The market formed another structure. See what the market did. It formed another structure here. The market formed another structure, and for the fact that the market was selling, the market was actually breaking out. The market is breaking out from a 4 hourly time frame pattern, and the market will most likely be selling to the downside. So seeing another pattern here, this is a continuation pattern here again. This is another ascending channel or so. This is another ascending channel. Forgive me if I did not know the name correctly, but you know that this is actually a confirmation the market is going to sell. So at this point, you can see with this pattern, the market broke out. After breaking out, and this still on this zone, the market has not yet left this zone. You see what it did? It danced around this zone, then broke out nicely. So you could have entered a trade maybe after seeing this breakout, knowing fully well you can put a stop loss above here, and the market will still sell to the downside. Or if you can still wait for the market to get to this zone here, to get down, then pull back, and then give you this bearish engulfing pattern here, you can still enter the trade at this point, and you sell massively to the downside. These few spikes here will give you massive profits, guys. To give you massive profits. So you could have entered the trade here
even if it did not give you the engulfing candlestick pattern at this point, but the fact that you know this continuation pattern here indicates the market will still sell. And previously the market is breaking out from a 4 hourly time frame um, chart pattern, indicating possible sales to the downside. So with this, you would want to sell the market. You can enter a sell trade at this point and take your profit down here. Take your profit down here. Let me show you where I would want to. Let's say you want to enter a trade around here with losses of, let's say, maybe 3.0. Then you take your profit around this point. Even it at this point, over $100 in profit. Very nicely, you catch those spikes very nicely, guys. You know, very nicely, and you get your spikes. Catch the spikes as much as you want. So then also take note that remember that I told you that the take profit is mostly around this zone here, where we have here, you can see. And if you see, if you the one we took profit there on the 15 minutes time frame was here, because that's one thing I also said I would show you guys today in this video. If you enter the trade here, if you notice the profit we took, no, we didn't enter, we entered around this point. One minute, let me show you guys something. Let me go to 15 minutes time frame. I want to show you guys something quickly. I'm going to show you guys something very quickly. All right, so on the 15 minutes time frame, let me do as if I want to set a sell limit so that we measure the profit. Then let me do that. Let me place a sell limit. Then let's go to the 4 hourly time frame. Okay, good. On the 4 hourly time frame, it means we are entering the trade at this point. Then our take profit is going to be where? Our take profit at this point will give us about $173 in profit. Then if you remember that I told you the market will most likely get to this support. So if you can hold up to this support, you see how much is that? That's about $311 in profit, guys. That's about $311 in profit. I'm telling you, I want to show you how powerful this strategy is, because what we saw in the 15 minutes time frame would have limited us taking profit at just at this point, not knowing that based on the strategy the market will most likely get to this zone. What the market would they just did was just to dance around. And if you can, even on that 15 minute time frame, if you can be patient enough, you notice that the market also gave a pattern that indicated it will still continue to sell to the downside. The market still gave a pattern that indicated it was still going to sell to the downside. Where is the pattern? Look at it there, guys. Look at it here again. See this. See this, guys. That's another continuation pattern. Then it broke out, and you could even enter when you see this bearish engulfing candlestick pattern here. You could enter at this point. Then you at this point you sell to the downside, or you can even enter once you notice this breakout. Put your stop loss above here, because we know the market will be selling to the downside to get to that support. You make massive profit, guys. It's just about being patient, because there's how the market behaves, and you will feel it's not going to go my way. I need to close this trade. Is this video too long? This is about 13 minutes already, guys. But this video you're just saying is very powerful, guys. What I'm showing you is powerful. All you need to do is to watch this video again and again, because you may not grasp everything here um, the first time you're just watching it. What I'm showing you is very powerful, guys. It works because it's what I'm using. Is what I'm using to milk the reef. I make my own money quietly. That's how I do it, guys. So that I'm sharing it to use an opportunity, guys, for you to study it and start making good use of it, make some good money. It's a very simple strategy. I've shown you from the 4 hourly time frame. You can get your analysis down to the 5 minutes time frame. You don't need much analysis. It's just to identify a pattern on the market. Once you've identified the pattern, the next thing you need to do is to draw trend lines to guide the pattern. Then after drawing the trend lines, the next thing you will do is to wait for a breakout. Once you notice a breakout, if you are finding if the breakout is happening on a higher time frame, then you go down to a lower time frame to find a good entry. Then always know that the market will most likely get to the bottom of this, to the support. the beginning of this channel, the market will get here. So now one other thing I would want to mention here in this video is this particular spot here. Okay, let me not, I'll do this in another video. There's something I want to explain about where the market begins, where the pattern begins, and where it ends. There's something very important about where the market begins, where the pattern here begins, like this spot here and this particular spot here too. I'll do this in another video. Now let me show you guys another setup I also found, still on this 4-hourly time frame. Let me take out these drawings to make the chart. Let me see if I can. Moment, guys. Let me take this out. Okay. Trading is not difficult, guys. Trading is not difficult at all. Trading is not difficult. And there's something you need to understand too, guys. If you look at this thing, just looking at this, you can see when the market got to this support, there is a chance it can break. Like I told you, most of the time it will break out of this support, but depends on the direction of the market. But when it got here, it did not break below this support. Instead, it gave a bullish engulfing candlestick pattern and it bought massively to the upside. So if you can monitor, that's what I used to tell people, if you can just stick to one particular pair, just study that pair for 1 full week, be moving through time frames, you will see you might be very profitable than just jumping from one time frame, because you'll be able to study some kind of stuff by yourself. If you were on the 4-hourly time frame and just on this particular chart, you'll notice that the market on getting here didn't break below this support. Instead, rather gave a bullish engulfing after this rejection week here, gave a bullish engulfing candlestick pattern and bought massively to the upside. Went and retested this zone here, then bought massively to the upside, targeting this high here, this top side again, you see. But now let's look at what the market did during this time. There's another pattern it gave. Now at this point I wouldn't want to buy, because based on the strategy we are trading, we want to see breakout of patterns. I'm not talking about just buying when the market gets to support. This one we're talking about breaking out of pattern to trade continuations. Now the market bought massively from here up to this point, then started coming back, giving us these lower highs and lower lows. So looking at this nice buys to the upside, then you see this this is a correction. Actually, this is a correction or a pullback. Then the market is creating lower highs and lower lows. So immediately I enter the place the trend lines, wait for the breakout. Excuse me. So the market broke out, then it was massive buys to the upside. Now how would you have entered this trade? You go to the lower time frame and find your entry. Once you go to the lower time frame, let's see what we would have done if we found this. If we go to the lower time frame, let's go to the lower time frame, like the 1-hourly time frame, and see what we possibly get there. Okay, this is the pattern right here. See, on breaking out, it went up, then came back again. It closed bullish. It didn't close inside the trend. Then there's a high chance you can enter a trade at this point. You can enter a trade at this point to buy, but you have to be careful with this zone here. This zone here is what you have to be careful. Like I used to mention in other of my videos, you have to be careful with this zone here. So you can see on the close of this candlestick pattern, there's a chance you can enter the market and you buy massively to the upside. This is 1-hourly time frame, so you know how much it means if you want to buy. Although I don't advise that you always try to, if you want to be holding trades, practice first on demo accounts and be sure, understand how it works before you go to hold on your real account. But on your real account, if you want to be using this strategy after you've practiced, try to just, even if it is 1 hour candlestick that you can scalp, guys, that is enough profit. If you have a better account, a good account size, and you make your profit and leave the market. Now look at this. If you go down to a 15 minutes time frame, you might find a better entry. Let's go to the 15 minutes time frame and see what happened there. 15 minutes time frame. All right, so this is it. All right, so the market on breaking out, it continued buying. I wouldn't titrate yet with this because there's no confirmation, although it's still buying. So they pull back, you wait for a pullback, and you see this bullish engulfing candlestick pattern here. You see this bullish engulfing candlestick pattern here. On the close of this bullish candlestick that engulfed this previous bearish candlestick, you enter a trade. Just put your stop loss below it. Put your stop loss below it. You can see the market um, bought a little, then the next candlestick spiked to the downside, but didn't get to the stop loss, and it continued buying to the upside. The only thing you do is to be careful with this strong support zone or key level that is up here. But so from here alone, you can make something reasonable. From here alone, like here, and your stop loss is just how much? About $7 or $17. Is it 17? Yeah, $17. Then my TP would be, sorry, I'm just doing this based on my account size. I usually use 5.0 to trade crash 1000, but even if you use 1.0, see my 5.0, this 3.0 lot size is giving $118, meaning with 1.0 lot size you can make at least 30 something dollars, about $35 with this setup. And 1.0 lot size will require about $9 or so. It's less than $10. So even if you have $40 on your account or $30 you want to try, you can do it. You can do it, and you see you'll make something reasonable. See the market bought to the upside with that same strategy. Then it pulled back and came back to this zone. See what happened? The market came back to this same spot where it started buying. One moment. Came back to this same spot where it started buying and continued buying massively because the market was actually bullish. The market was actually bullish even on a higher time frame. The market was actually bullish even on the higher time frame. You can see the market was buying even on a higher time frame. So you see it bought and went to the top. So guys, this video is already too long. I don't want to allow it to continue this way, but I believe you understand what I'm trying to show you in this video. It's 21 minutes. So all you need to do is just always wait for these patterns. The lower time frame also it's good, but know that the profit margin depends on the time frame you find them. You understand? And always know that the market will always want to buy up to the length, this top here, like what happened here. If you hold the trade from the way you entered it and you hold it up to this particular spot here, you know how much profit that would be. You know how much profit that would be. You see, like what we did here on the 15 minutes time frame. Let's say I decided to, if we hold the trade to target that high there, regardless of the spikes that will come in, we enter the trade at this point, then you hold the trade up to this point to target this high here. That's over $200. Over $200. So this can happen within a week. That's why I just to tell you guys, you can make over $2,000, over $1,000 in a week, even just following just a single pair. If you have this kind of strategy, then you follow it up in a week, there's a very high chance you can make at least $500, $1,000, $2,000, $5,000, depending on your account size. Once you find the setup, place your trade, set your stop loss, and allow it to run. You know the direction of the market, just allow it to run. Take out fear from yourself, because if you bring in fear, you'll never be profitable. It's not as if you won't lose at some point. You can lose, but your losses can never be compared to your winnings. Your profit will always be far more than your losses, guys. So that is it. The video is too long. I will have to do another video to explain that. Some other concepts I will have to introduce to you guys concerning the beginning and end of channels, like this particular spot here. I will do it in another video where this point, this particular level here, and this particular level at the top, I will show you some kind of secrets that you can also apply to your and also be profitable, guys. So if you are watching my video for the first time, subscribe to this channel and like this video. Share your thoughts in the comment section, and if you've been watching previously, and I believe this one will also be a game changer for you if you watch it and try to practice what you've learned from this video, guys. Then there's a link in the description of this video to take you to my Telegram channel. Click on that link, get to the Telegram channel, and stay there for updates. That's where I post most of my updates. Then and most times I drop setups there too. And maybe if I have events, I also post there too. Then if you want to contact me for one-on-one mentorship so I can put you through, because there are some little secrets you will never get on YouTube, guys, then you need to contact me through. When you get to the Telegram channel, you'll find my direct contact from there and reach out to me Then I will discuss your mentorship, how it's gonna be, guys. That will help you progress and succeed faster in this trading journey, guys. So till my next video, stay blessed and peace out.